Hi, my name is Allison Bishop. I am a certified public accountant and a financial coach in Portland, Maine. As parents, we have so many competing financial priorities. We have a limited amount of income and what feels like an unlimited number of places that money can go. A lot of parents really struggle with the two big savings goals, which are saving for retirement and saving for their kids' college educations. Whereas each of those honestly can seem so insurmountable by itself that put them together, it's just overwhelming, and I think people don't even know what to do. As far as the cost of college, I mean, I have 4 kids, and I don't know about you guys, but I don't have an extra $800,000 sitting around waiting, to educate them. So it's something that's been on my mind for the last 12 years or so since I've been a parent. And what I tell people when they're struggling with this question is that you have to save for your retirement first. There's a lot of reasons for that, but one big reason is that if you don't save enough now and you're struggling in retirement, you don't want to go back to your kids and have to rely on your kids' generosity to live a comfortable life. And there's no other ways to save for retirement if you exclude Social Security, but there's tons of other ways to pay for college. There's scholarships and grants and loans. Your child can work through college. They can do something, instead of a 4-year college, they can do 2 years community college and then 2 years at a regular. They can do vocational school. There's tons of other ways to pay for college. There's not any other ways to pay for retirement. So you really can't jeopardize your own retirement in order to save for your kids' college education. So what I tell people usually is, unless you're saving at a minimum 10% of your income toward your retirement specifically, I wouldn't save anything for your kids' college education. I would get to that point where you're saving 10 or even better 12% of your income. If you're above 12%, if you're at 15 or 18 or 20%, you're doing fantastic and you're probably on track for a really comfortable retirement. So once you feel good about your retirement and you feel like you're on a good track, then I think you can start thinking about college educations. And if you're not sure whether you're on a good track, there's tons of retirement calculators on the internet. Any company that sells retirement products is going to have a calculator to tell you how you're doing. And so you would probably put in things like your age and how many years you have left to retire, what you have saved so far, how much is going in there. And then that will tell you whether or not, based on what you've told it, whether you're on track to have, to maintain the lifestyle that you currently have in retirement. So once you get to the point where you feel like things with retirement are good, you're feeling okay about it, then you can think about saving for college. I have definitely had people tell me that you shouldn't even save for college because the college is all taken. And I really, really disagree with that. Because let's say your student gets a scholarship, there's going to be expenses that aren't covered by that. There's going to be books and computers and all sorts of things, maybe room and board. And if you're not saving for it up front, in all likelihood, your student's going to have to take loans out for it and pay it on the back end. And paying back loans is a lot more expensive than saving on the front side. And if you're concerned that, having money in the bank is going to impact your ability to qualify for need-based financial aid, the truth is that the FAFSA and the calculation of need-based aid weighs far more heavily your income at the time and much less heavily on the assets that you have saved. So in my opinion, it's short-sighted to purposely not save for college because you think they're going to take it. And the way I save for college for all of my 4 kids is in 529 plans. And I've heard people say, oh, you shouldn't use a 529 plan because it's so limited. And the truth is, 529 plans, so many of your college expenses, almost all of them, qualify as qualified expenses in taking out money from your 529 plan. So the way it works is you put in after-tax money. You don't get a tax deduction for it, and then you put it in the account, and then over, let's say, the next 5 or 10 or 15 years, you invest it and it grows. And then at the time that your son or daughter is in college and incurring expenses, you withdraw the money at that time and you pay no taxes at all on any of the money or any of the earnings that you've gotten over the last 10 or 15 years. So tax-wise, it's a really good deal. And like I said, it's a very broad category of what's considered a qualified expense. And for those parents who think their kids are going to get a full scholarship, even if that is true and they don't need any money for college, there are still, you can do several things. You can save the money for graduate school if that's an option. You are allowed to change the beneficiary of the account. So if you have another child, you can transfer the account to that child's name and have that money available for them. But if you really don't need it for college, and your child's gotten a scholarship, you can withdraw the amount up to the amount of the scholarship, and you will not be paying any penalty on that. You will be paying taxes, but that just makes it a tax deferred account and not a tax free account. And then if for whatever reason you've just oversaved for college and you have too much money in there and you can't justify it with scholarships or qualified expenses, you will be paying an extra 10% penalty on top of the taxes. But the chances for most of us that we're going to oversave for college it's so slim that in my mind it's not even a reality. So I think that's it. Good luck. Those are retirement and college are two tough mountains to climb. But everything is going to work out. Thanks.